This is the part of the show where I talk about what I believe individual investors should be considering as they make their investment decisions over the next few weeks. I always like to come up with 3 key points or ideas that individual investors need to consider. You can see them here. One that we always seem to talk about, Federal Reserve or central bank speak or what they're saying. These individuals tend to do a lot of interviews, and what they say in these interviews definitely moves markets. I want to talk about the current rebound and how individual investors should look at the current rebound when they make their investment decisions. And lastly, dividend paying stocks. Should individual investors just consider dividend paying stocks if we think a slowdown in the market is coming? So let's talk about what the Federal Reserve is saying. And interesting enough, we saw an interview by Jerome Powell, head of the Fed down in the US just yesterday. He spoke about a number of things and basically said that he sees inflation starting to fall, but believes that this is going to be a long battle, that the battle has just begun, and that it may take a few more rate hikes before we see inflation get down to the levels that they want to see. And interesting enough, when the interview began, the market was up. About a quarter of the way through the interview, the market fell on that idea that the Fed may raise rates still a few more times. And then by the end of the interview, the market was up again because many investors believe that if Jerome Powell wanted to be a little bit more negative or hawkish, he would have been. And he actually came off a little bit softer, talking about how we're seeing inflation pulling back versus having more of a hard hand. We also heard from other Federal Reserve governors earlier in the week as well, speaking a bit about how they think interest rates will have to be even higher, go above 5%. We see, I think we have a chart of jobs data that came out of the US recently. You'll notice that the month of January, jobs growth over 500,000. There it is there, kind of almost on par with what it was back in July and in January. So a big jump in jobs data, jobs growth. And the Fed said if we continue to see hot inflation data, hot jobs data, that they may have to raise a few more times. I think we have another quick chart here on consumer price index where inflation is in the US. You can see it starting to come down. It's a chart we've shown before, down to about 6.5% on inflation. And also shows that if you strip out the volatile food and energy, you're looking at just under 6%. So inflation definitely starting to come down in the US, but not nearly as much as the Fed would like. Second point to consider, as I mentioned earlier, before you make your investment decisions, is the current rebound in the markets. How much the markets have rebounded in January already. And it's interesting to note, you're seeing this rebound in many different areas, but I wanted to point out a few charts, specifically the chart of Meta. If we could put up a chart of Meta that will show a significant rebound in the stock. There it is. So we came into this year, you can see it here, the chart, stock had been down significantly, and we've had a tremendous rebound. The stock has actually doubled off its 52-week low, or its low point at the end or at the fall of last year. And so a big rebound. Do you want to look at a name like Meta? Do you want to invest more dollars in Meta at this point? I think the answer is you can, if you can obviously handle the risk tolerance or handle the risk that a name like Meta brings to the table. But I think Meta will continue to grow further. I think the price of Meta will continue to move higher. Another stock I wanted to show is NVIDIA, a chip maker in the US. You can see here, when you look at a chart of NVIDIA, how much NVIDIA has gone up this year. Again, doubling off the lows. It's a semiconductor or chip makers in the US. Took it on the chin last year, as I've said in other broadcasts. And here we have NVIDIA doubling off the lows. And a name like NVIDIA, a name that maybe I wouldn't look towards adding new money to at this point. I think it could still move higher, but I would say it's more of a hold than a buy opportunity. Then moving to another few stocks, let's pull up one, Amazon. I think we have a stock, our chart of Amazon. You can see the stock has moved up, far right-hand side of the chart, but not nearly as much as a Meta or NVIDIA. I think there's a lot of room for a name like Amazon to move higher. as AWS gets back on its feet, which is their cloud business, makes up a big chunk of their business. It's growing by just over 20%. Once upon a time, it was growing at 30, 40%. So I think a name like Amazon can make sense for a rebound, whereas a name like NVIDIA may have already rebounded significantly and a name you may want to move away from. And lastly, here's a chart on Alphabet. Alphabet today is actually down about 7 or 8% on the news that Microsoft is really moving forward into search using the chat GPT, the artificial intelligence to help them with their search. And everybody is starting to talk about how Alphabet or Google may be in tough with their search going forward. So names like Alphabet, names like Amazon haven't rebounded as much. Names that I think you can consider, whereas a name like NVIDIA, you may want to hold for now. Name like Meta has already rebounded, but I think there's still some room to go. So wanted to give you a glimpse at 3 different types of stocks that you can look at in different ways. The last topic that I wanted to point out for individual investors to consider when you make your investment decisions is this idea of dividend payers. And coming into this year, everybody talked about going into a mild recession. And if we are going to go into a mild recession, how can investors make money? Well, answer, through dividends. And a couple of stocks that I've been asked about recently, we'll pull one up, a chart on one of them right now, is BCE or Bell Canada. BCE is an interesting name. It pays a 6% dividend. There it is right there. But as you can see, it's sort of range bound. It has its small dips and bounces back. But overall, in my opinion, a name like BCE paying over 6% in dividends right now, fantastic if you're looking for income, but not so great if you're looking for growth. Another name, Enbridge, which we'll also show you a chart of, also pays over a 6% dividend. But as you can see there, very consistent. The ups and downs, the peaks and valleys aren't as great. But again, for income, a great investment. For growth, not so great. So I think it's going to come down to the individual investor. What are you looking for? Are you looking for income? Are you looking for growth? Or are you looking for a bit of both, growth and income? And that's really going to dictate what you should be looking at when you're looking for some investment opportunities or investment options. A lot of these names pay great dividends, but don't have a lot of growth. A lot of names like Alphabet or Amazon have a lot of growth potential to come, but they don't really pay any dividends. So when someone asks me, Alan, what do you think about Bell or what do you think about Enbridge? The answer always is the same. Well, what are you looking for? What do you want out of your investments? What are your investment objectives? And that will dictate whether dividend payers is right for you for this upcoming year.